Welcome back. Let's talk about the steel sector. We've seen a couple of moves here on the metal space over the last couple of trading sessions. ICICI Securities has a report which indicates the spot raw material spreads are the highest level that we've seen all the way since August 2022 on the back of falling coking coal prices. ICICI Securities also believes that flat steel players such as Tata Steel are better placed versus longs players as well. So we thought of bringing the ICICI Securities analyst himself, Amit Dixit, joins in now to give us the rationale for his report and the way forward. Amit, first up, from what we've read about your report and what the views are going forward, we believe that stocks should do well. Why are they under pressure today? I mean, is it because of routine profit taking or is there something structural?
No, so, what has happened that Chinese authorities have cautioned against the high prices of raw materials, and they have mentioned that there is some element of a speculation in the market, and they have actually embarked on certain checks to ensure that, hoarding doesn't happen and raw material prices don't rise under speculation. Now, this is not something very new. We have been seeing it for quite some time. Whenever prices really go high, you have these kind of checks, and then again things come back. Now, just to put it in perspective, currently Chinese steel price, if you look at it, it is like, if you look at past 15 years range, it is almost at 70th percentile. However, if you look at the profitability, that is at 12th percentile or 13th percentile. In rebars, in fact, people are still making losses. So clearly it has got to do with the high raw material cost that Chinese authorities are worried about. And therefore, if you iron ore has cracked around 4%, and that has pulled down the stocks. But I think it's a very transient phenomenon. Nothing I would read very structural into it.
Okay. Amit, hi, welcome to the show. Just wanted to touch upon this factor with regards to China. Obviously, demand from China plays a critical role in terms of how metal prices move. What is your estimate in terms of where metal prices could go, considering that China is expected to pick up further pace? We had the GDP numbers go by. People are bullish on the fact that China's internal demand is probably going to see an uptick going forward. In that context, what are you advising your clients?
Yeah, thanks. So what is happening in China, if you follow the indicators, look at M2, look at the credit indicators, look at credit impulse, and finally the real estate micro indicators, what we are seeing is that there is an uptick in that, progressive uptick, as it should happen. That first M2 grows, then your credit, followed by credit impulse, and then followed by your things on ground. So if you look at the prices in 70 major cities, last month in March, actually prices in 64 cities have risen, which is one of the highest levels we have seen in the recent times, in almost 1.5 years. So clearly that is good. What we see that, and PBOC have been injecting liquidity almost every day. So clearly the indication is clear. They want to stimulate growth. Now this April to June quarter is actually peak for construction. So far, we have not really seen the growth coming as per the expectations. But what I believe that going forward in H2, we would see prices going higher and the demand basically getting back to the normalized levels in China. At no point in time I am mentioning that demand will grow at a super normal growth that we have been accustomed to seeing in China. But even a single percentage shift in demand in China is always very good for the sector as a whole. And I think that would dispel some of the doubts that people have about the demand recovery. So all indicators are pointing towards things. It's just about it finally coming together.
A lot of these stocks, though, have lost quite a bit of value this year. Tata Steel, for example, is down about 10% this year. JSW Steel is down 10% this year. Of course, the market has corrected as well. But do you see any major recovery in these stocks? And if yes, what would your pecking order look like now?
Yeah, so Sonia, we would see, what people's expectations were initially in December when China opened up after COVID. People were expecting things to, suddenly improve overnight, and therefore stocks really went up. We were not optimistic at that point in time. The proof of pudding is in eating. So when we saw these indicators actually going up, so we grew optimistic. In fact, our change in stance happened in the month of March. Now, having said that, what I see that going ahead, the coking coal, for example, which is the most important indicator for India. Now, there is a difference between iron ore and coking coal. The thing is that China is quite dependent on its internal coking coal. So globally, coking coal prices going down don't have that much effect on prices in China. Steel prices in China, that is. While for Indian players, the spreads improve, and therefore the spot spreads, when they will be built up in Q1 or Q2, you will find a material improvement. Now, just to give you the fact that coking coal price from an average, quarter Q4 FY23 has corrected almost $60 a ton. When I look at Q1 FY24. So clearly that would be reflected in Q1, Q2. And the important point is that if China demand also there is some uptick, you will find that, the spreads would be better, the estimates would, people would reject their estimates upwards, and definitely, the stocks also should do better from here. So I think at this point in time, we would be relatively more positive on ferrous as compared to non-ferrous.
All right, more positive on ferrous. Amit, just a couple of points. I just wanted to know, since you said spreads are at an 8-month high, would you now look to adding some positions in the ferrous space? And secondly, you prefer flats versus longs. Can you give us a sense why?
Yeah, so if you look at longs, the channel checks that we have done, longs inventory is still pretty high. If you look at flat prices, people have increased their prices 4 times in a row. In fact, when I discussed last in your channel, I think it was 4 months back, then longs were trading at a premium of around 2,500 rupees to flat. Now that doesn't happen very often. Now, in fact, what we are seeing that flats are trading at a premium of roughly 500, 600 rupees a ton. So therefore, prices in flats have not corrected to that extent, but prices in longs have corrected. So therefore, we are relatively more, positive on flats versus longs.
Okay, just a quick word with regards to what your expectations are from Tata Steel this quarter. The reason I ask is that, last quarter, the European operations was quite a disappointment. Realizations were lower. There was a net EBITDA loss which they incurred, and costs were higher as well. They come out with numbers on the 2nd of May. What can we expect?
No, so if you look at the consensus estimate, it is somewhere around 5,000 to 5,500 crores. For Chorus, I think everybody is penciling in around $100 per ton of loss. While standalone operations, there would be an EBITDA uptick of roughly 2,000 rupees a ton. So clearly, I think that, quarter on quarter, if you look at the numbers, from 4,000 odd crores, my own estimate is 5,250. So that uptick would be seen. Now going ahead, and that is more interesting, that we should look at Q1 FY24, when the spreads in domestic operations would improve. In Tata Steel Europe, falling coking coal prices will help them, stable iron ore prices will help them, and the fact that European prices have actually stabilized. European prices are at 830 euros per ton, courtesy ArcelorMittal's curtailing operations in 2 furnaces in France and Italy. So therefore, that would support the price. And considering that they have come up with this carbon border tax adjustment, I think that should also help Europe. So Europe would be better. And therefore, if losses in Europe are curtailed and it springs towards its normalized profitability level of $40-45 a ton, we believe that, for Tata Steel, the performance should improve here on. And therefore, we have an ad rating on Tata Steel.
All right, Amit, always a pleasure speaking with you. Thank you so much for joining in and giving us your views. Positive on the ferrous space, positive on Tata Steel, and believes that the dips currently should be used to buy. Take a short break, come back.